let's get going. I mean, people don't want us to waste any minute. So today's webinar is Restaurant Revitalization Fund and the Shuttered Venue Operators Grant. This is really important. The Shuttered Venue Operator Grant, that money is already open for application. And the Restaurant Revitalization Fund, boy, that is first come, first serve, folks. So if you don't get ready, what do you want to do? Our firm, Community CPA, is a fantastic company. I can't tell you how great we are. And we are the kind of CPA that would talk to you after office hours. Yeah, I say that because 10 o'clock, 11 o'clock, I'm on the phone with client. And the client would say that, I just want to tell you that there is nobody ever. We're so urgent, but nobody ever would tell us that they would talk to us after 5. So you're the only person, and we knew actually do that systematically. So basically, if you get a hold of me, I will answer your call. Let's talk about Restaurant Realization Fund. So if this is too big of a word for you, RRF, just say RRF. So this is the Federal Assistance to Restaurant. It is part of the American Rescue Plan Act. President Biden signed into law back in March. Okay, the restaurant includes, this fund. It is for restaurant industry to recover from their loss. So the loss is defined as the difference between your total sales in 2020 versus total sales in 2019. Just general understanding. You know that if you already know how much you sell in 2019, you also know how much you sell in 2020. What is the difference? That difference is what Restaurant Revitalization Fund is supposed to give you. Of course, there's more details to it. You have to subtract PPP, but in principle, that's generally what that is. So they also, the act also give us give the allocation of the fund. So it's 28.6 billion. A lot of money. I don't know what that looks like if we put 28.6 billion together. I would really love someone could put that visual on internet so I can look at that, like take a deep breath, goes, okay, now I know what that money is. All right, so 5 billion is set aside for small businesses, small restaurants. The small defined as your 2019 sales is under 500,000. All right. So then eligibility. Let's really look at that. Eligibility is like before you start doing your work, right? You want to know you're eligible. And don't go on to do this if you're not eligible. You just say goodbye to this webinar if you know you're not eligible, right? But if you're eligible and these are the conditions to tell you that you are. Entities that owns a place of business where the public and would come over and to eat your food. So what does that mean? So that means that if you have a restaurant, then you're qualified. And experience the loss of revenue. What does that mean? That means your 2020 revenue should be less than 2019. If you happen to be those restaurants who actually scaled when the pandemic is here and really turned a corner and you actually had more sales, forget it. You're not eligible. So don't even go on to listen to me anymore. So then the eligibility, and they listed all these type of things, including cater. Cater, I'm thinking about my client who are doing bakeries and the things at home. That includes you, okay? So make sure that you know. And eligibility may be limited to entities that have on-site sales of food and beverages to the public of at least 33% of gross receipt. And eligibility may be limited to entities that have on-site sales of food and beverage to the public of at least 33% of gross receipts. You know what? I actually don't really understand that last eligibility. I'm telling you, there's a lot of, jargons I don't understand. And this is definitely a very confusing definition for eligibility. But let's look at what is not qualifying. Like if you have those conditions, you don't qualify and forget about this, right? So it says that if the entity owner owns, operate more than 20 locations. So if you have one business and that business runs different locations, and so it's kind of so it's almost like you file one tax return, but you file many sales tax. Those kind of business, if you have more than 20, you don't qualify. The entity has received Shuttered Venue Operator Grant. So this is what we're going to talk about in the later part of this slides. So if you can only get one of the two. The entity is a public traded. Forget about it. You don't qualify. If you have if the entity does not have a place of business in U.S., sometimes we have those clients who set it up a U.S. entity, but all the real operation is actually overseas in Vietnam. So it's not really here. So in that case, you don't qualify, even though in Vietnam, you are running a restaurant and running a big chain of restaurant, but it's still not qualified because your location is not in US. If the restaurant is owned by the state, federal government, or local government, not qualified. If the restaurant is permanently closed, not qualified. If the restaurant filed bankruptcy, not qualified. And if the restaurant is owned by a nonprofit organization, not qualified. Okay, so those are disqualifying conditions. And I always tell folks that if you are kind of unclear with your condition, and SBDC Center is a really good place to ask that question. And later on, when I finish the slides, I go into SBDC site with you and make sure that you know where to find them. You can get free help from them. Of course, you can you can hire Community CPA to do that work for you. So, but to get a free help, you go to SBDC, okay? How much can I get? So okay, so what's the calculation? So for business incorporated for all 2019 and 2020, which means is if you are a restaurant ongoing and in 2019 and 2020, you operated both years full, like you have 12 months in 19, 12 months in 2020, the formula is really simple. You take the gross sales in 2019 and minus the gross sales in 2020. So let's say 2019 is $1 million more than 2020. Then your Restaurant Revitalization Fund, RRF, is equals to $1 million. But here you need to subtract the PPP amount that you already received. So it's not $1 million, it's $1 million minus your PPP, okay? And let's say if the second condition is that if you didn't really have a full year of 2019, you actually was running just partial years in 2019. Then what you do is you calculate average monthly. So in 2019, let's say you opened up in May 15, then you're going to calculate the full months, okay? So gonna be June to December. So you would have a 7 month, full 7 month that you will calculate. So you take 7 months together, then you divide it by 7, you get the average monthly, right? Then you do the same thing for 2020 because you operated for the whole year. Then you also have an average. Then that average on 19 minus average monthly for 2020, that amount times 12, that's your total. Make sense? So this is how you calculate. Of course, you reduce your PVP. So that is what we need to, need you to understand. So that's why I say to folks that this Restaurant Revitalization Fund is one of the biggest that you would get among all the other ones you got. So you can't afford. You just simply cannot afford to not know, not apply. No way. No way, Jose, you must apply, okay? So, of course, for our client, what we're doing right now is we're pulling out in our database, we have our client who file taxes or doing monthly accounting with us. We know you're a restaurant. And then we already send you the video. We send you the video. We tell you, hey, if you need our help, we help you. If you don't need our help, let us know. So in our system, we actually set up the project for each of the restaurant client. We knew that we must contact them to figure out whether they do it or not. So some of them who does accounting with us, we already know how much they they can get or not. So it depends on the amount. Maybe they do so well, they don't qualify for that. Then we just tell them that, hey, I know you know what you know, but you don't qualify. And so that way we want to make sure that for our own firm, we want to make sure that we do not forget anyone. We have more than 12,000 clients, but thanks to our system, and we should not forget anyone. But if you're not worked with us, brand new, and you need to really figure out how to get that done. Worst come to the worst, you should go to SBDC, get a free help, okay? And so that way you don't miss out this money. And I feel so deeply of the trouble and the sadness the restaurant owners are going through. I mean, we don't label anything called mental illness easily, but I mean, who doesn't have some mental scars over this? We all do. I have. I'm just mentally scarred when the funds is not enough. So I'm just really concerned of my small business owners. There's nobody helping them. They don't even speak English. They don't even understand what I'm talking about right now. That's why on Friday we have a Spanish, on Monday we have Chinese, on Wednesday we have Vietnamese webinars, because we want to make sure, do our best, right? Do our best to make sure everybody understands that. And eligible expenses covered period. Eligible expenses, really everything. And the covered period is February 2020 to December 2021, folks. Okay, covered period. That's why if you file bankruptcy, forget it. If you close permanently, forget it, because this is the covered period. All right. And how and when to apply? It will be administrated through SBA. So it's not like a PPP. You can go to bank to get it done. So you really need to know the SBA's.gov website. And I have that website listed here. You can snap a picture on here. Later on, I go through website with you. Okay, bear with me. I want to go through my slides. So, earlier and before SBA made announcement, and normally when you get a federal grants and the fund, you have to go through a system called sam.gov, and with that you can receive federal government money. But they said that the restaurant owner don't need to do that. So don't go to, even if you applied it, don't worry. If you don't use it, it's just gonna go dormant and it doesn't matter. But if you haven't really spent time to apply for it, don't apply, because it is going to be a portal application. I think it's going to be very similar to the EIDL loan, like when you apply for that loan and then you got a portal, you answer questions, you upload things and like that. It's just going to be like that. It is anticipated. I mean, there was days all over the place. So earlier we heard the beginning of April, then went to the 9th of April, and now we're already past that date. So, and the speculation is April 15th. Why would anybody make April 15th a date? That's just gonna kill all the accountant, and we are busy with filing taxes on April 15th. And whoever makes some due dates on April 15th, I take it so personally. I think they're personally against us. I'm just kidding, right? And hey, we have to have some fun. And if not, we all gonna be dead, because life is too short. Why don't we just try to be happy? And sometimes if we pretend to be happy, we ended up really happy. Do you know that? Do you know that trick? And that's actually something I learned from this psychologist. And that's what, he was, I was reading this blurb in the book. I don't even remember the book name, and it says that, happiness is something that you can pretend it and then it will come to you. It's quite funny, but it's really true. Okay, so that Restaurant Revitalization Fund, it is first come, first serve. The SBA plan to award the grants in the order in which applications are received. Hey, did you hear me? Please. Okay. Don't rely on your accountant, okay? Relying on yourself. Get it done. And if you rely on an accountant, it's better to be community CPA because we're the people that you can rely on. Okay, here, what kind of application document you need? So I want to read through this because you really need to make a note. Take a picture, please. So applicant, which is you, and the to applicant form. So this form will be available on portal, and the IS form 4506, that's the one that they're going to pull tax return independently from you. So that form, you might as well just print it out, sign it, and get it ready. And also they want you be in operating in 2019 and the prior, and a must supply gross receipts for 2019 and the 2020. So then they also said that, and for anybody who began the operation not from 2019, then what you need to prepare, but here are the documents you must have. Number one, business tax return. So by now, maybe you already have your 2020 prepared. So got you 2 years 2020. And if you don't file business tax return, maybe you file Schedule C, or you maybe file Schedule F, whatever forms showing the business, that is what they want. And for partnership, it is specifically said that to include the K1. So don't just give your don't just give your 1065. You need to include your K1 and the bank statements. Okay, and external or internal prepared financial statement, such as the income statement, profit and loss statement, and the point of sales report, including IRS's 1099-K. So what is that? 1099-K are the credit card receipts, and the point of sales are your machine that you print out the receipt and all that. And for the financial statement, the government realized that some of you actually having them done by community CPA, so they ask you for external and internal prepared financial statements. So you just do that, okay? Make sure you get that. And it says that financial statement, they give you example of income statement, and they didn't really mention balance sheet. Let me tell you this. Most of the business owners understand the income statement, but come to balance sheet is sort of like become your accountant's job, right? So you don't know what that is. If they didn't ask you for balance sheet, don't produce more than what they're asking, but produce everything they're asking. That is the trick when you work with the government applications. Additional consideration in there is that if a restaurant cannot use all grants or permanently cease the operation on or before December 31st, 2021, the entity, the restaurant, must return unused fund to U.S. Department of Treasury. So they already said that. So if you got the money and you decide not to do anything and you didn't spend the money, then you need to pay it back. And the SBA might require disclosure of all owners with a combined equity of greater than 20%, which means if the restaurant is owned by several people, anyone who has more than 20%, the SBA might want disclosure, means that maybe your personal tax return need to go into SBA. They want to see how much equity you have. So they have a right to decide that maybe you don't need that, right? So that is what they're saying. Grants are not taxable like income, and all normal federal tax deductions are protected, which means that the grants is just not your income, also not your expenses. So you have it for free. EIDL advance grants and targeted grants are not deducted from RRF amount. So what they're saying is, if you got an EIDL loan, how you got a 2,000, 5,000, 10,000 sometimes, they give you that grant. You don't need to deduct that out of this total. That's what they're saying. Actually, only PPP go out of the total. And the restaurant is restricted from collected ERC tax credit from any eligible wages paid with this fund. So what they're saying is that if you have a quarter of payroll that you collect ERC credit, they don't want you to use this grant to pay that payroll because you already got credit. That makes sense, right? Makes sense. So this is so much about Restaurant Revitalization Fund. Let's go into Shuttered Venue Operator. So which venue operator is not shuttered? There is no one. Everybody is done. So bad, right? I'm actually really concerned with the pandemic just because I'm from Canada, so I'm very close to the news in Canada, and they just shut down Ontario and shut down all the businesses in Ontario because of a new strain of virus spreading. I don't know what that means. That just sort of means it will not be done. Sort of means the shot we got may not be helpful. So we don't know. Let's just focus on the positive things. If you could get $1 million out of this Restaurant Revitalization Fund, I think you'll be happier than not getting it, right? So important notice, the Shuttered Venue Operating Grant had already opened. So SBA already opened the portal. So you're supposedly to apply, but the system got really jammed, so broken. So they took it back and they're fixing it. So now they said that through the weekend of April 9th, so nobody can really do anything. So I just checked, it's not coming back yet. That can happen to Restaurant Revitalization Fund. So you just really need to get ready. Okay. And when a reopening date is determined, SBA will provide update. Okay. So SBA says that here is the place you can get an update. So this is where you do your application. And about this Shuttered Venue Grant, 16 billion is less than the Restaurant Revitalization. And again, it is already clear is SBA manage it, is not really the bank. So you would qualify. So this is what? So the qualifying entity, the business, and qualify for 45% of their gross earned revenue and a maximum 10 million. So you can get more than 10 million, but you get 45% of your gross earned revenue. And 25% of gross earned revenue, 2 billion is reserved for eligible applications with up to 50 full-time employees. So a way to preserve the small businesses' interest. And the grant application, the grant amount, how did that calculate? So it says that for a eligible entity for the theater in operating on January 1st, 2019, the grants will be for a amount equal to 45% of 2019 gross earned revenue, or 10 million or less. So let's say if I operating a local theater, and in 2019 I made $3 million. And why do I give myself such a hard math to do? Let's say I made $1 million gross sales, 45%. That means I'm getting 450,000 from this Shuttered Venue Grant. Okay, and for that theater, and that began operation after January 1st, 2019, the grant will be for the average monthly gross earned revenue for each full month you were in operation during 2019, multiplied by 6. Multiplied by 6. So let's say you only operated for 1 month, and your total that monthly average, well, you just have 1 month, so you just only average that 1 month. So let's say that's 10,000. You made 10,000 in 2019. So what they're saying is that what they're going to give you is 6 times that 10,000, so 60,000, or up to 10 million. So whichever is less. So now let's look at eligibility. So the eligibility says that the live venue operators or promoters, the live performing art organization. So I'm thinking of the museum operators. There's a lot of local small museums. Those are the one. And of course, also the talent show, like the American talent, that kind of stuff. Those are all eligible. Each subsidiary business owned by a eligible entity that also meets the eligibility requirement on its own right will qualify as eligible entity. So here they are defining the subsidiary business owned by an eligible entity. So if you have a subsidiary entity, so for example, if you have a theater group, And but you have this individual theaters in different cities, different state. So what it says that if you have your own, in the accounting point of view, is like if you have your own EIN number and you are a entity by itself, even though you are belonging to this large group, you qualify as an entity yourself. So you would qualify on your own. And must have in operation as of February 29th, 2020 means that before February the 29th, and you probably operated only in January, so you are qualified. And must have a defined performance and audience spaces. So what they're saying is that you cannot be not having this space that you lose, because the pandemic is really destroying our social gathering, right? So that's really where the theaters, everybody socially get together, sitting there watching movie. So that is gone. So they want to make sure you must have the performance and audience spaces. So that is to kind of making sure that these are venues that allowed large group together, and you couldn't do it, so you deserve that fund. Cannot be a public traded company, and not more than 10% of gross revenue from federal government. So you should not be, if you are an entity and getting federal government money, and take a look at it, maybe you're not eligible if it is more than 10%. So disqualifying condition. So if it does not have a place of business located in the United States, pretty much like the restaurant, right? So we're here to rescue our local businesses. So if you're located somewhere on the moon, and we don't get you involved with the Earth talk. So public traded is out, and more than 10% of gross revenue from federal government is out, and of a sexual nature. So the company presents live performance and the sales product or services of a sexual nature. Maybe that means those gentlemen club and places. I don't really know, and I don't really have a client of that nature, so I'm a little lost with that. I think up to your, interpretation. How about that? Right? And these are all the items that we got from the SBA unrelated, more authoritative website. Also, the other disqualifying factor is it is a museum or other museum of which with which it is affiliated have already received 10 million. Oh, anybody who already received. Why do you be so greedy? If you already received that much, forget it. Okay, priority. So here is the first 14 days, next 14 days. These are really just trying to help smaller venue operator to get money. So for example, the first 14 days, entity that suffered a 90% or greater revenue loss between April 2020 to December 2020, then you come in on the first 14 days. So the first 14 days already started, but the system broke. So that tells you maybe a lot of them are like that, right? And so the next 14 days is entity that suffered 70% or greater. Just, so they're giving priority different from the restaurant. The Restaurant Revitalization Fund was giving priority based on the disadvantaged group, women-owned, veteran-owned, and so those kind of criteria, and based on your sales. But this one is based on solely how much you lose. If you lose more, you get in early. If you lose less, you get in later. And get your document ready. This is something that I really need you to take a picture to know that if you are applying for those Shuttered Venue Operator Grant, and you don't want to go onto the website and start clicking. You want to get all the document that listed here ready before you click, because that will ensure that you go through it smoothly, get everything in. If you wait and pause, and I do not know, when the program is not mature and you wait for too long, you lose everything you put in. So try to get ready, right? So the background document needed, because they need to understand you. And you need to have a written statement of need. You can write that I am losing 90%, so gross sales. So that's your statement. And corporate a document, those are the article of incorporation and stuff like that the lawyer does, right? You should make sure that contact your lawyer. Get it right now. Don't wait. Government issued a photo ID of the business owner, your driver license. And if you tell me that you don't drive, then your passport. So, you must have ID, government issued. And the employee list with job titles and employee status and the tax exempt status letter if you are a nonprofit. And so those are background knowledge you need to have. And the financial statement includes 2019-2020 tax return, quarterly income statement for 2019 and 20, and signed by the primary officer of the organization. Copy of the most recent audited financial statement or single audit. This is just, you don't run around getting audited, okay? Don't do that, because this is really just for the larger ones. But if you are a one person comedy show person, and you have your little event center, and you don't need that. You just need a financial statement. And the indirect cost rate, that's same, and that's really for those large nonprofit and also financial institutions and schools. They would have established indirect cost rate already. Payroll just seems to be important. Payroll of February the 29th, 2020. The standard forms are the forms they will require. So it's quite involved, and it just really get to know what you need to do, okay? Now, allowable use of fund includes these are the funds. And I am not going to spend any time on here, and I want to be really really clear. And you can go back to look at those, almost everything. And if you get the funds, you just use it for business. Don't buy yourself a Lamborghini for a change. That'll be it, okay? And you need to maintain good records, and this is what accountants talk. And that's what Ian gonna tell you. And it is so important when you get involved with government money, folks. And it is not like you just borrow from your grandma and then, grandma don't remember anything. You just kind of decided, well, I'm not telling my grandma, and she doesn't even remember she gave me any money. The government is not your grandma to begin with, and they really do check record. And it is only fair for them to do that, so people are not abusing those money. And what about someone apply for $10 million of the grant, took so much portion away from you, and you could have qualified, but they took it all, but they should not even qualify, right? So we would encourage government to do that, to make sure it's fair. But for smaller potatoes like us, and just make sure that you maintain all the records, because that doesn't mean they don't audit you. And so you need to get ready and always maintain. And we talk about 4 years, and we talk about 3 years. Just do 7 years, add them together. I'm not kidding, because 7 years is the safest year among all the regulations out there. If you say that, okay, I don't remember, this one say 6 years, that one say 5 years. Here, Ying, you talking about 4 years, 3 years, you're so confusing. Of course I am confusing. That's my job, to confuse you so you can come to work with us, right? Nah, I'm just kidding. You know that I'm kidding. So, but I give you a number, 7 years. How's that? Just make sure you do 7 years, okay? And then these are the references. Now I'm going to stop sharing, and I'm going to show you the website I'm talking about, okay? And this is our website, and I meant to show you the SBDC Center. It's right here. See, I did California SBDC, and I also have Minnesota SBDC and Iowa SBDC. If you come over here, you can always go onto the location. You see how they have their location here? Des Moines, West Des Moines is right here. So if I go to Minnesota, and then right here, if I click, and I will go to, all at no cost to you. See how they are so clear in terms of their service to you? And the Find SBDC is right here. Okay, so make sure this SBA stuff, you know, if it is other things, I don't give you SBDC, but SBDC is related to SBA. They are the one established, they're getting funded by the SBA to exist. So they are related and they really do know what's going on. So make sure you go to SBDC to get a free help from them. And of course, the other way to get a free help, folks, is to go onto our YouTube. And we have, you know, our YouTube is on we have the Community CPA name. You type in, search for Community CPA, subscribe to our channel, because when you do that, every time we have a new webinar come out and we will post here, you get a notification. So even if you don't have this 3 o'clock time, and you would still have us, because it's going to be posted tonight. So make sure that you you know, we have these free resources for you. And we don't run around and give you a big talk about who we are and this and that, and run you around, then give you no answers. We're really the kind of person, rather simple-minded. We just want to have you know what you need to do, because we knew we couldn't help everybody, and we can help our clients, but if you're not our client, it is really difficult for us to even know you needed help. So with that, you want to be a guardian angel for yourself, right? To check onto our channel. That's a one way to do it. Then I also want to show you this SBA site. This is one of the link in the Restaurant Revitalization Fund, where I had that one separate page, and you have that link. That is the link lead you here. You see how they have PPP, EIDL, and the Shuttered Venue Operator Grant right here. And you notice that Restaurant Revitalization Loan is Revitalization Fund is not here. That's because it's not ready yet. So you just come over here to check. And here I want to introduce to you a nonprofit organization called National Restaurant Association. They give really good resources. So make sure you come in here too. You are a restaurant owner. How could you not know them? You need to go and subscribe to what they are giving out and really stay on top of things, okay? So this is one that we want everybody to know, and I make it bigger. It is called National Restaurant Association. This is the website I did, and they're talking about who is eligible, and but of course they don't really have, you know, they even said that a winery is eligible. I have winery people as my client, so that's great. And then of course, Shuttered Venue Grant. This is a SBA website, and this is the one that got into problem. Now they're fixing, so you know to come over here, okay? And if you Google Shuttered Venue Grant or Venue Operator Grant, and it will come out, but it is not the SBA.gov kind of thing. They have this thing, SVOG, that stands for Shuttered Venue Operator Grant, and the grant portal.sba.gov. So that's a authoritative website. So you go in here to apply. And of course, this is SBA website talking about the grants, program details, and who can apply, grant amount. And it's so much like what I was doing to you, and it just not simply copy and post. I don't want to diminish all Catherine's work down to that. And she worked really hard to organize it, go on to the all kind of resources, and checking with SBA director, Jane Armstrong in our area, and she actually talked about Restaurant Revitalization Fund on one of our YouTube channel. And that lady, I'm telling you, she doesn't sleep. Maybe nobody sleeps at SBA, which I don't know, but they really work so hard. I mean, this is so overwhelming. Yeah. But I hope this talk with you actually make you feel not so bad. And you know your priority, and everything can wait. Taxes can file extension, but that restaurant revitalization grant, no extension, folks. Don't kidding me. And you need to get that filed immediately as soon as that's open, please. It's first come, first serve. I'm so worried. I told you, everybody gets some mental illness over pandemic. Mine is just anxiety over our clients. And I just, I can't sleep when they say first come, first serve. You only have one mouse, one computer, you click. What if that click doesn't work? Wouldn't that make you worry? Because millions already submitted, and here you're still struggling with your application. So the trick is you get yourself ready, folks. Okay, remember that list I have on the preparation ready, and you need to, take a look at that list and really get on your knees and prepare one by one. That's literally what we do for the clients, because we want to get it in right away. So make sure you do that. I am so happy you're here. I am really grateful that you trust us and come in to listen to us. And make sure you tell your friend and other restaurants to listen to our videos and get them to get that funds. And unless you didn't lose money, otherwise you deserve to get money. Okay, I will talk to all of you, not to talk to all of you, but to see you again soon. Okay, bye bye.